Understanding your T4. All right, so first thing you should know is there's a new box for 2023. It's box 45. It's called Employer Offered Dental Benefits. All it does is it tells CRA whether the employee had any dental care coverage with the employer. So it's good. Basically going to be a choice of five numbers. Number one is not eligible to access any dental care insurance or coverage of dental services of any kind. Second choice is payee only. Third choice is payee, spouse, and dependent children had coverage, dental coverage. Number four is payee and their spouse had dental coverage. And number five is payee and their dependent children had dental coverage. I'm assuming, I'm not sure, but I think it has something to do with the Canada Dental Benefit that CRA or the government of Canada was offering. So yeah, so that's a new box on your T4s. So don't get scared if you see it or when you see it. Next, you've got box 14. That's obviously the most important box. That's your employment income. That's your gross employment income for the year. Now, if you do look at your pay stubs, you'll notice your last pay stub of the year. If you look at the cumulative section, cumulative column on your last pay stub, it will be the same amount here on your box 14. Total revenue will be box 14. And honestly, I think the second most important box on your T4 is box 22. That's your income tax deducted throughout the year. The reason that's important is because it's going to determine whether you're getting a refund this year when you do your tax return or whether you're going to have a balance owing. Because if you watched my because if you watch my video on understanding or reading your tax return, I mentioned that in order to know if you have a refund or not, you need to have paid taxes, and you only get a refund if you pay too much taxes. So that's why this box 22 is very important, because if you don't enter it correctly, or if you don't enter it at all, then you're not giving yourself the correct calculation. Hopefully, you've paid too much taxes and then you get a refund. Now, all of the other boxes are important, of course, but box 14 and box 22, in my opinion, are the most important. Box 16 is the amount of pension that was deducted, CPP, the amount of CPP that was deducted from your paycheck. That's obviously important to enter because it actually acts as a non refundable tax credit. Now, 16A is kind of useless in 2023 because this is the new second CPP contributions that will be deducted from your pay, but it only starts in 2024. So your 2023 T4 is not going to have an amount in this box. So I don't see the point of having this in 2023. So this should be empty. 16A and 17A should be empty for 2023 because you're only going to start paying for this additional CPP, this additional level of CPP in 2024. And that happens if your income is above a certain level, then you're gonna get an additional CPP contribution at a different rate. So 16 is if you have work. So the difference between 16 and 17, as you can see, they're very similar. 17 is for Quebec residents, so if you contribute to the QPP plan, and 16 is if you contribute to the CPP plan. 24 is your EI insurable earnings. 26 is your CPP or QPP pensionable earnings. 18, box 18 is how much was deducted from your paycheck towards EI. Well, these are the premiums that you pay for employment insurance, and that comes out of your paycheck. And there's a maximum per year, of course. 20 is a registered pension plan. So if your employer has a registered pension plan and you contribute to it and they probably match it or add something to it, then it'll that amount will show on your box in box 20. Now it's not an RSP plan. It has nothing to do with your RSP limit. This is separate. It's a registered pension plan. It is a deduction on your tax return though. It does act as a deduction on your tax return. Now your pension adjustment is a crazy calculation that has to do with how much your employer is contributing or matching with your pension plan. Now, the pension plan does have an impact on your RSP limit, but it has an impact for the following year. It's going to come reduce your limit for the following year. So, whatever's in box 52 does not act as a deduction in the current year, but will reduce your limit, your RSP limit for the following year. Box 55 is just the PPIP premiums that you paid or deducted from your paycheck. Box 22 we mentioned is your income tax deducted. Box 44 is any union dues you had to pay, came out of your paycheck. Box 46 is any donations that came out of your paycheck as well. Box 56 is the PPIP insurable earnings. So box 56 is the same as what box 26 is to box 16 and 17, and what box 24 is to 18, and what box 56 is to 55. And then, of course, if you have additional boxes here, they'll show up at the bottom here. Most common boxes I'll usually see on the T4 is the one for health insurance premiums that were paid, that were deducted from your paycheck. So it'll be box 85, I believe, will be here with the amount of insurance premiums that were deducted from your paycheck. Yeah, there you go. Employee paid premiums for private health services plan. Some other common boxes I would see is either 39, 41, or even box 40, other taxable allowances and benefits. Now, the T4 is prepared by your payroll at your employer, or either HR. Either HR or payroll prepares your T4, or the accountant in your job will prepare your T4. But it is possible that they make a mistake. It is usually prepared using your last pay stub. So you can always match it with your last pay stub if you want to make sure or double check that the information is correct. But if you feel like an amount is incorrect, don't hesitate to check back or follow up with your employer, because it is possible that an amount is incorrect. And CRA would not know if it's incorrect because your employer sends this T4 as is to CRA. So if there's a mistake from the source, CRA would not know about it, and it could potentially hurt you. It could also benefit you if the mistake is to your advantage. For example, if box 22 is overstated, then that's an advantage to you because that means there's a better chance you'll get a refund. If box 14 is overstated, though, that would not be good because your income is higher. Oh, and finally, box 28, basically, if it's checked, it just means that you were exempt to pay CPP or EI or even PPIP, which is very rare. But if you do have one of these boxes checked, then you should not have had deductions on 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 the corresponding boxes. So if you, for example, if you were CPP or QPP exempt, then box 16 and 17 should be empty. Just an additional note here on box 20, you don't have to add an RSP contribution if you have an amount in box 20. Box 20, once you enter an amount in box 20 in the tax software, it will flow through the T1 return and has its own line for deductions. Has nothing to do with RSP, so don't confuse both of them. So here you go. Here's registered pension plan, box 20 of all T4. So there you go. There, it's a deduction on line 2700, and RSP is on line 2800. So they're both next to each other, and they both will come reduce your total income, giving you a net income that's lower than your total income. And therefore, if your net income is lower, then your taxable income is lower. And of course, box 12 has your social insurance number. And if you're filing your own taxes, obviously make sure the year is correct. Sometimes you might mix up your T4 with last year's T4 and you're using the old T4. So always look at the year to make sure you've got the correct year. All right. If you have any questions, leave in the comment section below. Thanks for watching.